Okay, let's dive right in. Welcome to this professional analyst briefing and explainer, where we're going to unpack Ouster's Q1 2026 financial performance and, just as importantly, their technical momentum. Look, if you're tracking the industrial automation and robotic spaces, you already know how absolutely crucial perception technology has become, especially with current macroeconomic pressures. Today, we're breaking down Ouster's latest earnings report to see exactly how their bottom-line financial results are mirroring their big technological leaps. It's a fascinating look at where hard tech meets serious commercial scaling. Before we get too far into the weeds, please note that this video is for educational purposes and not financial advice. Our goal here is to just objectively analyze the data and market dynamics presented in the source materials, hopefully giving you a much clearer understanding of the business mechanics at play. So here's our roadmap for the briefing today. We'll start with an executive summary, move into commercial drivers, explore their technological moat, break down the financial mechanics, and finally wrap up with the outlook. Starting with Section 1, the Executive Summary. Let's look at the headline financial results for Q1. Right out of the gate, Ouster delivered a really robust $49 million in total revenue for the first quarter. Now, what makes this figure stand out so much to institutional stakeholders is that it marks a massive 49% increase year over year. I mean, in a hardware sector where supply chains and deployment cycles can be famously sluggish, a 49% growth rate is a screaming signal that market adoption of their sensing technologies is aggressively expanding. We're not talking about incremental growth here. This represents a fundamental shift in how quickly these industries are moving from early pilot programs to full-scale commercial deployments. And how did they get there? They hit this revenue milestone by shipping over 12,600 lidar and camera sensors during the quarter. And this volume isn't just a random one-off spike. It officially secures their 13th straight quarter of record product revenue growth. Think about that for a second. Consistent quarter-over-quarter growth of that magnitude proves an incredibly high level of revenue predictability and highlights a deeply embedded market demand. For stakeholders evaluating long-term viability, 13 consecutive quarters of record growth shows a highly functional sales engine and a manufacturing pipeline that's really built to handle sustained global demand. Digging a little deeper into those top-line numbers, product revenue specifically hit $48 million. That's up 55% year over year and 18% sequentially. We're also seeing some real operating efficiencies at play. Those efficiencies, alongside the sheer volume growth, lifted profitability and helped improve their GAAP net loss to $17 million, which is a solid $5 million improvement over the previous year. Meanwhile, they're operating from an incredibly strong foundation, holding a very comfortable $175 million in cash and short-term investments. That liquidity ensures they've got the runway to execute their strategic roadmap without any immediate capital constraints. Moving on to Section 2, Commercial Drivers. Let's examine where this revenue momentum is actually coming from. So out of those 12,600 plus units shipped, lidar comprised about 65% of the total volume. The remaining 35% is supported by their expanded camera vision portfolio. This product mix is actually vital because it proves Ouster is successfully operating as a multimodal perception provider. It opens up massive cross-selling opportunities within their existing client base. By offering both high-performance lidar and advanced camera systems, they can cater to a much wider array of customer needs, basically acting as a single-source vendor for complex perception suites. So who's actually buying all these sensors? Well, this commercial momentum was heavily driven by the smart infrastructure and industrial verticals. We're talking about critical, high ROI use cases, warehouse automation, yard logistics, intelligent transportation. They secured new million-dollar contracts for Ouster Blue City and multiple million-dollar deals powering industrial automation. On top of that, the recent integration of Stereolabs camera vision is proving to be a massive tailwind for companies building foundational AI models. As labor shortages persist globally, these automated solutions are rapidly transitioning from nice-to-have upgrades to absolute operational necessities, which drives very sticky, recurring demand for Ouster's hardware. Let's transition to Section 3, the technological moat. Here, we'll explore the Rev8 OS and the concept of physical AI. What we're looking at here is a literal paradigm shift for the market, the new Rev8 OS. This launch introduces the world's first native color lidar sensors. Powered by the next-generation L4 Ouster Silicon, the Rev8 OS delivers double the range and double the resolution of previous iterations, all designed with functional safety and massive scale in mind. Fusing high-resolution depth perception with native color directly on the sensor itself drastically simplifies the compute requirements for customers. Instead of forcing clients to synchronize separate camera and lidar feeds, which, let's be honest, is computationally expensive and really prone to latency, Ouster's unified hardware does the heavy lifting right there at the edge. And that brings us to a core concept championed by CEO Angus Pekala: physical AI. By combining native color and perception across their portfolio, Ouster is building the foundational sensing platform for systems designed to literally sense, think, act, and learn in the real world. They aren't just processing data in some remote server farm. They are positioning themselves as the actual eyes of next-generation intelligent machines. Whether it's an autonomous forklift navigating a chaotic warehouse or a smart traffic intersection managing pedestrian flow, physical AI requires perfectly synchronized spatial and visual data, and Ouster is purpose-built to supply exactly that. All right, Section 4, Financial Mechanics. Let's analyze the margins and reconciliation.
Let's meticulously review this GAAP to non-GAAP reconciliation for the quarter. This is absolutely essential for understanding their true gross margin profile and operational efficiency. They reported a GAAP gross profit of over $20.8 million, which represents a 43% margin. But, to get a clearer picture of their ordinary operations, we really have to add back non-cash and acquisition-related expenses. So we add back $826,000 in stock-based compensation and $862,000 in amortization of acquired intangible assets. Peeling back those variables gives stakeholders a much cleaner, more accurate view of the underlying unit economics. So by making those adjustments, we arrive at a clean, non-GAAP gross profit of over $22.5 million. That translates to a non-GAAP gross margin of 46%, which impressively remained flat year over year. Sustaining high margins while you're aggressively scaling volume and integrating new acquisitions, that's a huge indicator of pricing power and rigorous manufacturing discipline. Crucially, management has reiterated their long-term goals here, maintaining an aggressive annual revenue growth trajectory while strictly controlling operational expenses. This commitment to strict OpEx discipline ensures that as top-line revenue scales up, a much larger percentage flows directly to the bottom line, laying out a highly credible pathway to sustain profitability. Finally, Section 5, the outlook. We'll cover Q2 guidance and wrap things up. Looking ahead, Ouster has provided some really robust guidance, expecting second quarter total revenue to land somewhere between $49.5 million and $52.5 million. This projection is a big deal because it will include a full quarter of operations integrating the Stereolabs business. This is going to give stakeholders their very first complete look at the revenue power and the synergistic value of the combined entities under this new unified platform. Honestly, hitting the upper end of this guidance would go a long way in further validating their aggressive expansion strategy. As we look beyond just the immediate quarter, the long-term thesis really starts to snap into focus. 13 consecutive quarters of growth proves that the underlying technology is highly effective and heavily demanded. The focus now shifts to the macro scale: autonomous yard logistics, intelligent warehouse robots, smart city infrastructures. They're all moving out of the early adopter phase and entering mass deployment. Foundational sensing platforms like Ouster's are positioned squarely at the core of that massive global transition. Thank you so much for joining us for this professional analyst briefing. As these physical AI systems expand across literally every industrial sector, they are going to require eyes to see and understand the physical world. The ultimate question isn't whether the technology works anymore, but rather, how rapidly will global industries adopt this native color physical AI to scale their own automation deployments? Think about the sheer pace of that transformation as we wrap up today. Please remember to like and subscribe for more videos.